Hey, welcome back, everybody. Coming to you again today, Wednesday, May 6th, 2026, for the May market update. And we're diving into everything happening in the Temecula Valley housing market. I got the freshest real time numbers pulled this morning across all 6 of our cities here. And once again, this is part of an exclusive collaboration with top real estate YouTubers from across North America. Each one of us is breaking down what's really happening in each of our local backyard and market. So if you want the inside scoop on markets beyond just our valley, check out the links below. They'll be attached from all these different creators that I've worked with over the past year. And these are pros that know their markets inside and out. And stick around. At the end of this video, I'll show you exactly how smart buyers right now are turning today's uncertainty into tomorrow's equity. And as usual, everything I'm talking about, you can follow along with the graphics that I'm including on the screen. So let's get into it. So as of today, May 6th, 2026, the market pulse, the 30-year fixed mortgage is at 6.49%. That's up from 5.99 back in February of this year. Our California gas average is 5.79 a gallon. The Strait of Hormuz conflict, we're at day 67. And Temecula Valley status is still seller leaning. So let's talk since February 28th, when tensions erupted in Iran and the Strait of Hormuz effectively closed. Emphasizes we've seen 20% of the world's oil supply got choked off overnight. California gas, as you know, has jumped from 464 to 579 a gallon, depending on what kind of gas you're getting. Diesel is more, but that is a 25% spike in 5 weeks. And when that happened, the mortgage rates also followed, climbing from 5.99 to 6.49 on the 30-year fixed. So on a typical $500,000 loan, that's an extra $162 a month you're paying out of pocket. Here's what headlines aren't telling you. Even at today's rates, we're still below where we were last year in 2025 at last April's peak of 6.8%. And our local market, as usual, I've been saying this every month, it's showing remarkable resilience. And in fact, the data I pulled this morning shows something most agents are talking about. And let me get into it and show you. So I'm going to go over each city in just a second here with the breakdown, but here's where it's really interesting. Most national headlines are screaming buyer's market, but the data tells us a completely different story here in our valley and in all of Southwest Riverside County. Of our 6 cities, every one of them is currently in a seller's market territory, and I'm going to break that down for you right now. Let's start off with Temecula. So the median list price for Temecula is $925,000. Inventory is sitting at 315 homes. Median days on the market is at 42. The market action index is at 45, and that's showing still as a strong seller's market. Now, the market action index did tick down slightly from 47 last month, and inventory has crept up, but prices, they're holding firm. Per square foot is still $389 per square foot. Translation, buyers have a few more choices, but sellers still hold the leverage on well-priced, well-presented homes. Shifting over to Murrieta, California, the median price of the homes there is $770,000. Inventory is at 307 homes, and days on the market is at 49. Market action index is at 42, and it's still a slight seller's advantage. So here's something that's interesting. With new listings are coming in around 789, 450, higher than the current median. That tells me sellers are still testing aggressive pricing and getting it on the right product. Next up, Menifee, California. The median price in Menifee is $665,000. You have an inventory of 185 homes. Median days on the market is just 35 days so far. That's the fastest in the valley. Market action index is at 44, so it's a slight seller's advantage, but it's leaning strong. Menifee continues to be a really affordable sweet spot for first-time buyers and move-up families, and homes are moving fast. And if you're shopping under $700,000, you need to be pre-approved and ready to write the offers. Next up, Let's get into Winchester, California. The median list price is $675,000. Median price of new listings is $639,990. Inventory is at 133 homes. Median days on the market is 42, and the market action index is 45. Price per square foot is lower at $274, and the median rent is $32.69. And there's lots of new construction activity here in Winchester with Hudson at Canterwood. They've had 42 homes closed. Juniper and Willow Point has 38 closed. Indigo Marquise by Lennar has 51 closed. Next up, we're going to go to Wildomar, where the median is $685,000. Inventory here is only 65 homes, and the market action index is 47, the strongest sellers market in the valley right now. So that tiny of inventory number is doing all the work. And if you want established neighborhoods with larger lots and a little more privacy, this is your zone, but you'll need to move quickly based on the fact that there's only 65 homes. And finally, rounding out the valley, let's go to Lake Elsinore with the median home price of $625,000. Inventory is 187 homes. The median days on market is 49, and the market action index is 43. And still, Lake Elsinore does offer the most relative value in the valley right now, with strong inventory, slightly longer days on the market, and a median price of new listings actually a little bit higher than current median of $647,920. That tells me sellers' momentum is building, and smart investors are already quietly making moves out in Lake Elsinore. Let's take a look at the monthly and annual savings by rate reduction based on a 30-year fixed. So if you have a loan amount drop of 0.25% versus 0.5%. Now let's look at a monthly and annual savings by rate reduction based on a 30-year fixed. So if you have a loan amount drop of 0.25% or 0.5%, this is where you're going to see the savings. On a $400,000 home, that's $66 a month for 0.25% and $132 for 0.5%. $600,000, $99 a month drop, 0.5%, $198 a month. $800,000, you're looking at $132 savings a month on 0.25%, and for 0.5%, $264 a month. And on those $1 million homes, you're looking at $165 a month versus $330 a month on a 0.5% drop. And annually for these, that's anywhere from $1,188 all the way up to $3,960 a year in savings. So here's the $1 million question. Should you wait for the rates to drop if you're on the sidelines thinking about buying? And I'm going to share with you what the smartest clients are doing right now. And what that is, they're looking at the math, not the headlines. So take an $800,000 loan. If the rate drops just a 1/4 point, which many economists expect later by the summer, you save $132 a month. A 0.5 point, that's $264 a month, and that's over $3,100 a year. But here's the kicker. While everyone else is sitting on the sidelines waiting for the perfect rate, you're paying down what you owe on your home and building equity as well. And I keep emphasizing that. If you wait on the rate, you're going to be late. But if you just buy the house now, you're going to be building that equity, and you're in the market with more inventory now and less competition than what we've seen in 3 years. And when the rates do drop, you just refinance. You marry the house, you date the rate. All right, here's some hidden opportunities for May 2026. Still, those builders are giving you seller concessions up to 3% in Lake Elsinore and Menifee. Builders are doing the rate buy downs. Lennar is offering full point at Indigo. DR Horton, closing costs and credits at Willow Point. And you have negotiation power has returned after a 3-year absence in this. And you've got inventory at its peak, highest since spring of 2019. So price stability, it's not dropping, but all these things are negotiable with the builders. All right, let's talk about what's happening on the seller side right now. So since 2019, sellers are offering real concessions up to 3% toward closing costs in some situations. Builders, Again, they're buying down the rates. Lennar may be offering full point buy downs. That can be negotiated. DR Horton is offering closing cost credits. So these are things to get out there with your agents and inspect. Again, you're never going to be able to time the market perfectly, but you can recognize opportunity when it's staring you in the face like it is right now. So what's your move? If you're a buyer, stop waiting for the perfect rate. Focus on the right home at the right price. Make sure you're pre-approved so you know how much you can afford, not just pre-qualified in this market. It certainly helps you win when you do put in an offer. Consider adjustable rate mortgages to start lower now, refinance when the rates drop. If you're selling, the key is still pricing strategically. The sweet spot is about 2 to 3% below your dream price, and that's where the offers come in fast. Sellers invest in presentation. In a balanced leaning market, condition matters more than ever. So be flexible on terms. A quick close or rent back could seal the deal. So let's take a look at what are some likely scenarios over the next 90 days. Best case probability of about 40%. Iran tensions ease, gas drops below 5 again, and rates may fall to 6, maybe 6.25. Buyer activity starts to surge. Steady state, 45% probability. Current conditions persist. Rates hover at 6.4 to 6.6. We're still in a balanced but slight seller market. Will continue. And a stress case with a 15% probability could have conflict escalation, could continue. Gas could exceed $6 again, and rates push towards 7. Looking ahead to the summer, most economists see 3 scenarios: the 40%, the 45% chance we just discussed, and the 15% chance. But here's something I can say confidently. This valley has weathered every storm, and we're going to come out stronger, and we're going to be resilient. And pricing and home sales are going to be stable just like they are now. We've been through these rate hikes, spikes, and crashes, and yet home values here are still doubling. Schools keep improving. New businesses are still coming to our valley because this isn't just a market, it's a lifestyle. You've got the wine country, top-rated schools, and it's a place where neighbors still wave hello and know each other. So bottom line, this market rewards the informed and the decisive. So don't let headline hysteria paralyze you. The opportunities are here. You just need to know where to look. Hey, I hope this update helped you cut through some of the noise that's out there in the media. And again, I'll see you on the next one. Remember to look for those links to those other creators so you can see what's happening throughout North America. And drop a comment below. What's your biggest concern right now? Is it the rates? Is it inventory? Is it the gas prices? Drop your comment and I'll get back to you. And until the next time, stay blessed.